Hi, folks. We have an awesome group of panelists today talking about macro investments and more. So first, I have Akshat, who is the head of investments at Arthur Hayes' forthcoming family office fund, Maelstrom. And next, we have Steve. Steve McKeon is the managing partner at Collab+Currency, an early-stage venture fund that focuses on the consumer vertical in Web3. And last, we have Jim Parillo, is the managing partner at Figment Capital. Figment Capital is an early-stage VC fund that focuses on investing in blockchain infrastructure. My name is Joyce Yang, and I'm the founder of Global Coin Research. We are a research and investment DAO. So let's get the conversation started. So let's start off from very high level. Help us make sense of this crypto market. Why don't we start off with Akshat?
I think for Maelstrom, we're private market deals only, so we're not really looking at liquid token investments. We look backwards from the ideal scenario, which is in about a year and a half, we got a Fed pivot coinciding with Bitcoin halving, coinciding with a lot of the upgrades and infrastructure kind of build out that's happening over the next year or two in the Ethereum space, and also spaces on top of that, and working backwards from there. So I'd say probably things are going to get worse as Fed kind of rates increase and kind of keep going until something breaks, and then from there we'll start to see an improvement as things go the other way.
Steve, you're nodding agreement.
Yeah, I think just like on the comment on the Fed. So obviously everyone's watching what the Fed does. It affects all asset classes. It affects crypto. We're also interested in like the degree to which crypto sort of decouples from some of the other asset classes. Like a simple but crude measure is like a 1-year beta. Like just take BTC against like the S&P 500. That measure tends to like rise in bear markets and fall in bull markets. So like the all-time high was kind of like all the way through 2018. It rose up a lot again in 2022, but actually has been falling. So it started falling sort of like starting in Q3 of 2022, which 2022 was the second highest it sort of had ever been, other than 2018. So that feels like a bullish sign to some degree to us, like the fact that it is slightly decoupling from the broader economy again. That said, like we're venture investors, we have a 10-year horizon, so like we don't really pay attention kind of like day to day to the prices. We just keep deploying capital into great builders that are building interesting stuff, and that seems to have been working so far.
Yeah, if you've made sense of it in 2022, like let me know. It was pretty crazy, I think. We think about a couple of different things. U.S. regulation by enforcement over the last couple of months has been, last couple of weeks, last couple of days, has been pretty interesting and worth looking at. We're also seeing, whether it's like China and Hong Kong opening up and kind of embracing crypto, as well as the UK coming in, embracing crypto a little bit by trying to figure out regulations for once. The Middle East embracing crypto. And so we're also seeing sort of like, we're investing in decentralized networks, and we're seeing the fact that like there is still interest here. There's a lot of interest right now in the space. And maybe, one country or like area trying to regulate by enforcement creates opportunities in other areas of the world and creates opportunities for people building in the space.
Yeah, following up on that thought, Jim, there's been obviously a lot of regulatory announcements and news coming from the SEC looking at BUSD or any of the other just projects in the space, right? What are you guys' thoughts on this in terms of what are you looking at that may be concerning for you? What's interesting on an opportunistic point of view for investing or geographically arbitraging in that sense? If anyone wants to start.
Is that targeted me? Yeah.
No, anyone.
I mean, just the quick reaction to that is all things decentralization, right? And that's when there's single points of failure in any system, it's a little bit easier for regulators to go after that party or entity, and that's part of our investment thesis. Is in every part of the stack, from top to the bottom, anything that contributes to decentralization will decrease the likelihood that regulators will be able to go after a particular entity or group. Not to say that's going to eradicate censorship, but it's a mitigating factor.
Yep.
Yeah, I mean, I think most of the issues, as we've seen over the last year, have predominantly been centralized actors. So, so then when you think about the SEC going after decentralized systems and declaring things securities, like that's obviously really problematic. I'm somewhat hopeful that, like, in the longer run, Congress steps in, because the truth is that if you look at who is hurt, who's the largest loser when a protocol restricts U.S. citizens from accessing an airdrop? It's the IRS. The IRS would take 30% of that in tax revenue. Take DYDX. It's like $1 billion airdrop, right? Now, not all of that would have been to U.S. citizens, but that was probably 100 million or more in lost U.S. tax revenue. When you add that up over an ecosystem that's growing, you're going to start talking about billions of dollars of lost tax revenue. So I'm from Oregon. We have a Senator, Ron Wyden, who's been an advocate for the industry. The truth is, I don't think Ron cares that much about crypto. What I do think he cares about is tax revenue. And I think that's going to be like an increasing theme that we see on the political side, which hopefully reins in kind of some of the madness around the SEC.
So like citizenship arbitrage.
Something like that.
We have look at the community, look at the people around you. Everybody is like young. Everybody is like. There's a lot of young people here. There's a lot of people of all different ages and groups. But I guess the thing is that's important to kind of understand about the U.S. is, like, in this context, is that there are a ton of very talented builders and teams building in the United States right now. From an infrastructure perspective, I think it's one of the most exciting places to be building right now. I live in New York City. It's very interesting to see all the people who have moved into the city post-COVID. But, like, let's be honest here. Like, young people can move around the world. They don't have to come to the United States. They can go somewhere else. And if we start to see other jurisdictions and countries and areas of the world like embrace crypto and embrace the people who are building this future of the internet, then, like, they're going to go there. And especially if they're getting, like, there's a carrot and there's a stick. And if you go to the United States, you get hit with a stick. And if you go somewhere else, you get a carrot. People will start going. Eventually, they'll start hating getting hit, and they'll start going for the carrots. So it's like, it's fluid. Like, I think to your point, over time we'll see them come to their senses.
Yeah, and when you're seeing projects now who are building in the U.S., do they ask you guys about kind of the regulatory concerns or anything, the type of advice that you give them on that front?
Well, we hope that they're thinking about it, and they should be. We're kind of over that period of time where it's like, complete, like, who cares? We have to be thinking about it. We have to be thinking about the fact that, like, Circle and USDC is a regulated company. We have to think about the fact that Base is, being launched by a publicly traded company in the U.S., and so it falls under SEC guidance. I work at Figment Capital. It's a spin out of Figment Inc., which is a proof-of-stake infrastructure provider. And so, as many of you have probably paid attention to, the Kraken notice was something that we got a lot of conversations about staking, the risks of staking, the implications of the Kraken notice and the fine. Or I guess it wasn't a fine, it was a settlement, right? But we had a lot of questions about staking. We're still answering those questions. And everyone that's not talking, it's one of the questions that I've been talking to a lot of people in this space about this week. And I plan to continue to have those conversations. And if anybody, like, wants to talk about it, especially on the staking side, like, happy to engage, because it's an interesting moving target.
Yeah, for sure. And staking is our next topic. Specifically, we want to talk about kind of trends and kind of narratives that you're seeing in the space, right? Staking has been one of the most popular kind of narratives that folks have been talking about with Ethereum Shanghai coming up. And just curious what you guys are seeing on the ground and anything that folks are looking at or missing out on. Steve?
Yeah, I'll start.
Steve's always the one nodding the most
Sure.
enthusiastically, so I'd love to hear you first.
Look, I mean, I think ETH, once Shanghai goes live, it's withdrawable in terms of staking. People are worried about like a big withdrawal that leads to some sell pressure, I actually think there's going to be a substantial number of entities that are holding ETH that were not willing to be locked up for an indefinite amount of time, and you're going to actually see a massive increase in the amount staked, and that's going to become effectively a very large fixed income instrument, one that I don't think people are fully appreciating yet. So we're excited about that. I mean, I think the other thing we're just seeing on the ground broadly is like we're excited about things like the AVM that was announced yesterday, and the idea of like people building directly on the bridges and sort of like what dynamics that leads to. And again, just because we're a consumer fund, like this increased focus on apps, like we've been building infrastructure for a long time.
Right.
There's still a lot more infrastructure to be built, especially around things like privacy and identity and like key management, many other things. But like we have a lot of infrastructure now and enough to start unlocking some of these consumer use cases. And we're excited to kind of see that start to unfold.
Yeah, like specifically on the staking side, it's like front and center right now. Infrastructure is like sexy again, finally. What we've been, I mean, liquid staking derivatives have been out for a while. People are really starting to pay attention to them more. I think to Steve's point, like if there is withdrawals, they will likely be moved into a liquid staking derivative, and so they will just be restaked. Speaking of restaking, that's also on the top of mind for a lot of people with EigenLayer, with mesh security, which is something Sunny is building, and then also with like replicated security for those of you not familiar with the Cosmos ecosystem, but some sort of shared security model for the Cosmos ecosystem, also known as like interchain security more broadly. So we were very excited about shared security and how that's going to be moving forward. There's a lot of conversations that need to be had. There's a lot of like ideation, I think, that still needs to be done in that space, but it's interesting. And then the other one that's actually kind of flying under the radar a little bit is DVT, distributed validator technology. Obol Network, for those of you who are familiar or aren't familiar with it, has launched their first cluster of distributed validator technology for Ethereum. They actually have been running it since December, and it's got 99% liveness by using a group of 5 validators to act as one. And so if one validator goes down, you are still active and you're not going to be slashed for liveness. So very interesting, very exciting stuff in the world of staking. And I think it's going to heat up, and hopefully all 3 of those work together in some way in the near future.
Akshat?
Yeah, no, I'd echo the same sentiment. Actually, Obol was our first deal. We're a relatively new fund. We're long DVT. We're also excited about delegated non-custodial staking. That's an interesting space that's going to keep evolving, and we're seeing some of the incumbents make some moves in that space, but also some newcomers. It's going to be pretty exciting.
Yeah, I saw you guys just had an announcement of supporting EtherFi.
EtherFi, yeah.
That was on the CoinDesk article.
Yeah.
Okay, interesting. And what else besides staking? Anything else that you guys are looking at? Interesting narratives, interesting trends?
For us, one kind of cycle agnostic strategy that we're interested in is, I guess, theme that we're focusing on is novel tech that isn't inherently blockchain or crypto, but tech that leverages crypto as an incentive network to distribute labor, resources, and the tech itself. So that's an example of that is like we recently closed an investment in a company that it's an AR company. They're trying to solve the asynchronous joining problem in shared AR experiences, but they're using crypto as a tool to distribute the compute power to actually enable that. So that's a space that we're kind of focusing on as a theme.
Gotcha. Steve, anything that you guys are looking at interesting?
I mean, just so many different consumer verticals that are interesting to us. Have always been interested in gaming, interested in like networked physical products, which like has a lot of different potential use cases that I think is pretty much unexplored.
Can you elaborate a little bit more and give some examples for the audience?
Yeah, so like a good example would be like G Money's drop that he did at Art Basel. So it's 9 DCC. And the idea was like to drop apparel that had a chip in it. That chip then was networked. The network was run by another company called IYK. We had several of our portfolio companies that were like contributing to this drop in various ways. Once you have the chip in the apparel, you've got all kinds of interesting things you can do where when people enter, like it can be access. You can build in access rights. That could be anything to like a club, do a gym, to like when they enter a certain store, they get some sort of discount, or there's, I think sort of like where this is going to go is somewhat undetermined, but we are pretty sure that like, these things are going to go in everything. They're going to go in furniture. They're going to go in traditional art. There's like somebody was talking about like, can I put one of these inside the mural on my street art so that when people come by the mural, they can take home like a digital collectible from it. So I think it's just like a general theme that we think is sort of like fascinating and we're trying to deploy capital into.
Yeah, I guess from my perspective, so we come from an infrastructure heavy background, and so when we look at things, we kind of have 2 or 3 lenses. One is the investor, but the other one is like from the operator's perspective. And so we think about things that are like, how is this going? Like we're more practical, I think, sometimes about like how is this actually going to work? Like what are the nuts and bolts? Like we're thinking about the I don't know if you saw the L2 panel. I asked a question about it. Like we're thinking about how does one decentralize the sequencer set? Because right now the sequencer set is 1. Doesn't sound great for decentralization. And so that's like one thing that we've been thinking a lot about. We're keeping an eye on Celestia specifically because they're likely going to be, there's sovereign rollups that are going to be launching. We're excited to see how they do that. We think a lot about MEV, what Flashbots is doing, very cool. We're also thinking about Skip and what PrimeEv is doing, which is pretty cool. And then I guess with a little bit of account abstraction is kind of starting to become more of a topic. We're excited to see what kind of solutions come out there, maybe ahead and post, the EIP, and then anything else? Roll-ups versus roll-apps versus app chains. And that's something that we've been thinking a lot about, both from the investor perspective, both from like the user experience perspective, but also from the operator perspective and the profitability or unprofitability of running large decentralized validator sets.
Jim, you always give me really good topics to follow up on, and
Cool.
right now it's. I'm just curious to hear all of your thoughts on valuation because it was reported that Flashbots is raising at $1 billion valuation. Right? How do you guys make sense of this? Does valuation make sense in this market right now? What do you guys think about that? Akshat's smiling. I'll let you go first.
Yeah, I mean, in this space, we're focused on seed kind of seed or pre-seed kind of deals. Even in that space, we're finding valuations are still relatively high relative to other industries, down, of course, from 6 months ago. But yeah, in that particular segment of the market, it hasn't quite come down the same way that we were expecting. But that in part could be a function of the fact that there's just a lot of dry powder in the space. There's, I think, I forgot who released this report, but it's something like $100 billion of dry powder in crypto-focused funds alone as of January. So there's just a lot of money around, a lot of liquidity still.
That's a lot of money.
Yeah.
We also focus on sort of seed and pre-seed. I mean, we've seen valuations come down pretty substantially since 2021.
Yep.
Probably still high relative to other parts of tech and other industries, but just marking against where crypto valuations were in 2021, like deals, they used to close at 40. Like everybody wanted to do like 4 on 40. It was like the standard round. Those are clearing at like 20 to 25 now.
Yeah.
And like seed deals, like really early stuff that was clearing at like 20 is now clearing at like 10.
Yep.
So we've seen about a 50% drop, I would say, in terms of early stage valuations. More emphasis on like seeing some evidence of traction to get rounds are taking longer to close. So definitely has changed a bit, but deals are still getting done. Teams building interesting stuff are still getting funded. So things are still chugging along for sure.
Yeah, there's been a little bit of like quality has actually improved, I think, a little bit in like the opportunities. There's maybe fewer of them. I think teams that don't have to raise, like you don't have to raise right now. Like some people are saying don't and maybe wait a little while. I think having runway is also super important. So like people are having to do that trade-off, right? Like, do I raise right now in this market? The most important thing is to build and make sure that you're going to be able to support your team and that you're going to get your product to market. That is the most important thing. Not going to touch on like the valuation of Flashbots, but I will say that like what Flashbots has done for this ecosystem and for the Ethereum community is probably one of the most important things that's ever been built, and they built it twice. They built it for proof of work Ethereum, and then they went ahead and built it, the relay for proof of stake Ethereum. And it sounds like they're about to build it for all of the L2s and L3s and L4s that eventually will inevitably exist on Ethereum. So that team is incredible. They're thinking about things way in advance of everybody else. They're thinking about latency right now. And it's an incredible team that I'm like privileged to, like, anytime I can spend any time with them at all, I feel very honored to be in their presence.
Thank you, panelists. We have run out of time, unfortunately. I'd love to hear more about how we can follow you or find you online. If you guys could share your Twitter accounts or Telegram, maybe Akshat, start.
Yeah, so Maelstrom is Arthur Hayes' family office. We're doing an unveil in about 2 weeks. But you can find us at Maelstrom Fund. That's our Twitter handle.
Steve? Yeah, Collab+Currency. Just Google it. You'll find all the stuff. It's collabcurrency.com, Twitter, Medium. Yep.
Figmentcapital.io, at figmentcapital.io. And if you just spend a little bit of time on Twitter, you'll find me. It's a semi-anon.
Well, thank you, panelists, for your time. Let's give them a round of applause. Thank you, everyone.